crypto users are young. They're incredible risk takers, i.e., they have a huge appetite for risk, preposterous appetite to risk. So anything that is being battle tested as an idea is first through speculation. And I look at two of them. One is meme coins, right? So meme coins is two things. One is, can memetics have value over time, whatever? Of course they can, right? But it's a way of showing that and how the internet works, spreading memes, whatever. But that's not the big thing. What it is instant capital formation on a global scale, of a scale we've never seen at a speed we can't even understand. Yep. And nobody sees it. That's what we're battle testing. And we're doing it via an internet native thing, which is a meme. Mm-hmm. But it's not about memes. Well, it is partly about memes, but really it's about how do you coordinate a vast distributed network to raise capital instantaneously.
I mean, you're spot on, right? Like, so meme coins are essentially people feeling comfortable with the tokenization of everything.
Yes.
Raoul Pal recently made a notable statement in defense of Dogecoin's dominance. He insisted that the meme cryptocurrencies chart was extremely bullish and called it the best chart ever. Dogecoin has always been one of his favorite assets. He once revealed that his portfolio contained a high concentration of this meme cryptocurrency. For his part, Paul based his theory of Dogecoin's superiority on its historical outperformance compared to Bitcoin. He noted that Doge has outperformed the largest cryptocurrency by market cap by 500% since its inception and expects the meme cryptocurrency to extend its gains. The meme cryptocurrency launched at 0.00056 and has since risen 461,407% to its current price. He speculated that Dogecoin would become the new standard, dethroning Bitcoin as the leading cryptocurrency. However, these bold predictions seem ambitious, given the quality gap between the two assets. Bitcoin has become a global asset driven by its limited supply and historical price performance. However, while it has proven profitable, Dogecoin's origin as a meme and its unlimited supply have raised questions about the viability of Paul's claims. According to Raoul Pal, this is why meme coins like Dogecoin might skyrocket in 2025. Before we move forward, if you want to stay updated with the latest crypto events and news, you can subscribe to our channel and like this video. Now, let's get back to Raoul Pal's view on the overall crypto market.
By my work, we're a $4 trillion economy today in crypto. If we extrapolate trend rate of growth and assume the network growth slows over time, I think we get to 100 trillion by 2032, 2034. 100 trillion. That means there's 96 trillion of wealth that's going to get created. So halve me, and I say this all the time, $46 trillion of wealth is about to be created. It's the largest wealth generation event in all human history. It's fractionalizable to a rice worker in the Philippines as it is to somebody in Fifth Avenue. It is an unbelievable opportunity. And to go back to it, you're front running the institutions and you get to do all of this.
Listen, I could not agree with you more. And, when it comes to macro financial analysis, you are the king. And I would never question your work on this one.
Paul also suggested that Dogecoin could play a key role in the financial world, citing its remarkable performance against Bitcoin. His perspective is based on a potential bullish flag pattern on the Dogecoin-Bitcoin chart, which he believes could signal a significant bullish breakout. His analysis on the Doge-Bitcoin chart, spanning over a decade, has identified two significant falling wedge patterns, a formation that technical analysts often interpret as bullish. The first pattern, from 2014 to early 2021, preceded a bullish breakout that propelled the meme cryptocurrency to all-time highs against Bitcoin. Now, a similar pattern appears to be repeating from the 2021 peak to the present day, suggesting the possibility of further upside potential despite Doge's inflationary supply model. His statement challenges traditional conceptions of monetary value and raises the question of the meme cryptocurrency's ability to become a legitimate store of value. Paul predicts the rise of stablecoins, stock tokenization, and potential shifts in U.S. policy, including the possibility of Bitcoin serving as a reserve asset, are structural changes that could significantly accelerate global cryptocurrency adoption. Paul stated that the current market has about 600 million wallets globally, with an asset class value of $4 trillion, a number he projects will grow dramatically over the next decade. We're really only 4% of the way there. Everything is up for grabs, Paul noted, predicting the market could reach $100 trillion by 2032 if adoption trends continue. He added that these forecasts assume a slight slowdown in the growth as the industry matures, but the long-term trajectory remains decidedly upward. We've observed the financial system itself in this area, whether launching new products or developing solutions, he stated, adding that this institutional presence has been crucial in transforming cryptocurrencies from a niche investment into a mainstream financial instrument. The rise of stablecoins, stock tokenization, and potential shifts in U.S. policy, including the possibility of Bitcoin being used as a reserve asset, are, according to Paul, structural developments that could further accelerate its adoption. While acknowledging that fraud and scams remain a challenge, Paul emphasized that the transparency of blockchain makes it a valuable tool for law enforcement. Because we can record the movement of money on chain, it's actually very helpful for government agencies to track fraud. When a former Goldman Sachs executive liquidates nearly all of his traditional investments to bet everything on cryptocurrencies, the financial world takes note. Raoul Pal did just that, transforming himself from a traditional macro investor into one of the cryptocurrency's most ardent institutional advocates. His radical portfolio shift reflects more than personal conviction. It also reflects a fundamental rethinking of wealth distribution in the digital age. Paul's thesis on cryptocurrencies begins with a rigorous analysis of traditional monetary systems. He argues that unprecedented money printing by central banks around the world has led to what he calls the great debasement of fiat currencies. According to Federal Reserve data, the M2 money supply increased by approximately 42% between 2020 and 2025 alone, representing the largest 5-year expansion in decades. This monetary expansion, Paul argues, renders traditional store of value assets such as precious metals and real estate unsuitable for the current rate of monetary devaluation. His solution: invest heavily in scarce digital assets, particularly Bitcoin, which he views as the ideal collateral for a new financial system. Paul's comprehensive cryptocurrency strategy represents more than just an individual conviction. It reflects a broader institutional recognition of the role of cryptocurrencies in portfolio construction. His thesis combines macroeconomic analysis, network theory, and generational trends to demonstrate that digital assets are not simply alternative investments, but necessary hedges against monetary devaluation and technological disruption. For cryptocurrency investors, Paul's approach is both inspiring and cautious. While his extreme allocation demonstrates his conviction, it also underscores the importance of risk management and a deep understanding of cryptocurrency fundamentals. As traditional financial boundaries blur with digital innovation, Paul's bold thesis could prove precedent or serve as a warning about concentration risk in emerging asset classes.